Hi, everybody. I'm just going to jump in. So as Stephanie said, I'm the national lead for the equine programming at Acera Insurance. I've been with the organization since 1998. I've been around horses since I was much younger than that, like since I was 10. And I'm very pleased to be here. We've done a couple of these already for Horse Council, and they've proven to be quite useful as a resource. And I will say now that if there are questions related to any of the insurance programs that Acera provides to members of Horse Council, I encourage you to reach out to the team. We've got a great team in Kelowna. They're a 1-800 number away, and they can answer all the questions that you have. Well, today's topic is about one specific element, the weekly accident indemnity. There's some slides as a preface to that, which I'll start now, and we'll go through them quite quickly just as sort of a refresh. So next slide, please, Steph. Okay, so most of you will know that we used to be Capri, CMW, and before that, Capri Insurance. And in our industry, in the insurance industry, these mergers and sort of changes of names are becoming increasingly common, and there's a reason for that. In our industry, bigger is necessary. It's not even better or preferred necessarily, but it's necessary. And this is really just a byproduct of the consolidation of financial institutions around the world, where efficiencies are found through consolidation, influence is pronounced through consolidation. And really that's part of the reason why Capri originally merged with CMW, a broker of similar size and scope in Burnaby, BC several years ago, and why last year Capri CMW merged with another large brokerage in Calgary and 15 other brokerages around the country to form what is now a national organization called Acera. It truly is just a big sort of box of small brokers and departments like ours in the equine division, still servicing the same clients across the country, but now just under a national brand. So I thank you for your patience as we continue to sort of introduce ourselves or reintroduce ourselves, but it truly is a case now of a merger. This is not an acquisition. We didn't sell, we didn't buy. We merged together with like-minded brokers to form what is actually a very large organization now of employee-owned, as an employee-owned organization. And I was told recently that we're now as an organization somewhere in the top 15 brokers in terms of size and scope in the country. Anyway, next slide, please. Okay, so as I mentioned a moment ago, we've had these programs in play really since 1998. Since the programs were introduced back then, they've grown, they've morphed, they've changed, they've expanded. We now insure all of the PTSOs in Canada with the exception of Quebec because I'm not a francophone. And certainly all of the major breed and discipline organizations in the country, we would count as clients of ours as well. We think we're in, sorry, we don't think, we know that we're in service to approximately 100,000 folks in the equine space under various programs that fall generally under my administration. Next slide, please. What we do in the community is probably known to most of you. We have basically three sort of sections, if you will. We have the liability section, which is personal, commercial, and professional liability, property insurance for all things related to horses, that we provide through coaches and clubs and individual members and farms and so forth, feed stores, tax stores, a whole range of other things. And then, of course, the horse themselves, we insure tens of thousands of horses for their life and for their medical and surgical expenses under a program called EquiCare, which is one of the original products that was developed back in the 90s. Next slide. So I wanted to share this just because it's important for listeners to sort of understand the importance of these programs and why they resonate year in, year out. A basic tenet of risk management practices anywhere in any business is spread of risk. If you spread the risk thinly, there's less risk for the insurance company, there's less risk for individuals, and that's really what we've done with these programs. And it truly does create safer environments, it avoids uncertainty and all the other elements that are shown here. The biggest one here, though, is the fifth bullet point, which is improves the insurability of the class. And that's really important. Horse industry as an insurance risk assessment or as an insurance component, it's sometimes hard to find insuring companies that have any sense of understanding of the horse industry or the risks that are very specific and unique to the horse industry. And so by having these PTSO programs, we're able to go and influence, frankly, insurers both domestically and globally to get their attention, to show how, after all of these years, we've managed to spread the risk. The claims performance on these programs statistically is extremely good, even though there are incidents that happen almost every day. But because we've got so many members insured, it gives a sense of confidence, and consistently, we outperform what the insurer's expectations are year in, year out. And so I just wanted to share that, just because risk management is obviously something that we speak about all the time in other terms. The next slide, please. Okay. Okay. One more. There we go. Okay. So the value in membership. And again, shouldn't have to really speak to you about that. You're all members of Horse Council. You join for a variety of reasons. I hope they're all good reasons, but really to support them in their work. As a partner of Horse Council BC, we know certainly the advocacy that they do on your behalf to government, which is so important these days to keep government's attention on our industry. And never was that more important or more demonstrable than through COVID, through that horror of COVID that we all suffered through around the world. Horse Council and the other PTSOs did an unbelievable job, a thankless job in many circumstances, of developing language and messaging to support the community, to take information from government, relay it out to our special community across the province, and work tirelessly to make sure that when facilities could be open, the facilities were told they could be open. When coaches were told or were allowed to have lessons, it was through messaging that by and large came from Horse Council. We took literally thousands and thousands and thousands of inquiries, as did Horse Council throughout that period, and did our very best collectively to try and serve the community. And thankfully, the industry has come out on the other side probably pretty strong. I think we lost some people along the way, but lots of them have come back, and I'm very thankful for that. But all of these elements about the Horse Council, supporting them, encouraging your students or encouraging colleagues to become members to help and maintain that membership is so important, never more important than right now. And so we're just sort of here to sort of pass that message along again, and still in support of Horse Council. Next slide, please. Okay, so we'll just sort of whip through the insurance components that you probably all know about already, and then we'll certainly get to the WAI in a moment. The personal liability policy remains to be certainly the most talked about and the most important, really, of the various insurance benefits that we provide to members of Horse Council. That $5 million of coverage gives security to not only horse owners, but horse users, facility managers, coaches, competitions, all those folks that are exposed to the animal. Just knowing that there's that backstop of liability insurance at a significant limit has created a pretty secure environment over the years, and continues to, and becomes the one that and frankly is the one that we get the most inquiries about specific circumstances where horses may have caused bodily injury or property damage to someone else, and the horse owner, the horse user, is now exposed to the potential of liability being imposed upon them by law or in law, and that policy is there to respond and defend and provide settlement where it's appropriate to do so. For several years, that policy was insured through Lloyd's of London. Last year, we moved the policy to a domestic carrier in Northbridge Insurance, and we're very pleased about that. It's better for us to be in a domestic environment wherever we can, although Lloyd's would be considered a domestic insurer, although they're in London. But Northbridge is certainly a domestic, and they've been incredibly supportive this year. And I'm confident that they'll be a partner for all of us for many years to come. They continue to be receptive to changes and modifications to the policy that increase the scope of coverage, and as needs change in the industry, they seem to be willing to change with it, and that's a very good thing. The other component that's automatically provided through the membership, of course, is the AD&D coverage. which was increased this year to a limit of $40,000 on the principal sum. And as recently as this past week, unfortunately, I had to respond to a situation where someone had passed as a result of an interaction with a horse. So we certainly know in real time the value of that policy, and how the families of folks that are catastrophically injured or die as a result of that interaction are supported. That policy, again, has been incredibly stable and very important to the members across the country, certainly in BC, for all of these 25 years. And that limit increase this year was the first in all of those years. And we expect that there will be an acceleration of the increases in that limit over time, just to try and keep up with some of the inflationary pressures that are upon all of us. In addition to those member insurance products that are automatically provided, of course, we have horse mortality. I mentioned that at the outset. We provide tack and equipment insurance to coaches and clubs and to members. We can increase that accident, death, and dismemberment policy through an optional policy to an additional $75,000. And more people seem to be taking advantage of that, which I think is very smart. And then, of course, the weekly accident indemnity, which is really the subject of today's discussion. Next slide, please. Okay, so in 2024, all things have sort of stayed the same as we approach January 1, with the exception of Horse Council adopting a couple of additional policies. The emergency life-saving surgery coverage that's available when a member chooses the member's name perilous horse mortality option, and emergency stabling expense. We did a seminar on that a few weeks ago. There is a recording of that specific topic related to that those two specific items. And I'll encourage you to have a look for that on Horse Council's website, and perhaps have a listen. And of course, I can take some questions today on those as well. Next slide, please. Okay, so let's get to the meat and potatoes of this. I'm sorry if that was a bit choppy. I didn't want to dwell too much on stuff that you didn't want to necessarily listen to. So here we are. The WAI policy, weekly accident indemnity policy, has been around for several years. Lots of coaches have taken advantage of it. Lots of people have taken advantage of it, just knowing that there's some uncertainty that comes with being around a big horse, being on a farm, working in general. Not everybody's got a short-term disability type policy at their disposal. They may be independent contractors. They may be self-employed. They may work for an employer who does not provide such a thing. And so the weekly accident indemnity is a very effective backstop for those folks that need that protection. There is a limit on what it can do, so we're going to talk about some of those limitations. But the point is that it is a policy that can be obtained, that will provide up to 26 weeks of benefits, and up to a maximum of $500 per week for if you're unable to work. The most common, frankly, example that we see in these claims is someone who's working on a farm, just because of the type of clients that we serve, that's injured. They fall off a tractor. They are injured mucking out. I mean, I've worked on a farm for many years and suffered a whole bunch of injuries that laid me up a little bit. Fortunately, never for too long. But the point is, we're in a farm environment. We all know that it can be a risky business, and there are some dangers that loom. So injuries do occur. It covers the individual 24/7 anywhere in Canada. And the one thing I wanted to say here is, and you see the fourth bullet point, it's not limited to equine-related accidents. When we approached the insuring company back in the day when we introduced it, we were sort of specifically talking about our community, which is this sort of 100,000 folks that we insure under these programs. And so we sort of tailored some of the limitations on it, frankly, to that community, the things that we would see typically. But beyond, we certainly the wording when it was developed and over time has morphed to be more inclusive. So I can take advantage of it as a member, and I'm certainly not on the farm that often anymore. But I can certainly take advantage of it just as a guy that works in an office if I want to supplement my my disability exposure. The WAI component, when it is purchased, also includes that $75,000 AD&D policy. So in theory, if there was a serious catastrophic injury, and you were laid up for a very long period of time, perhaps permanently through a very serious and permanent injury, you could potentially be receiving both benefits. In other words, receive something from the 75,000 as well as some income replacement for up to 6 months. So it's a pretty broad policy. There are limitations on it, not the least of which is that you have to be under the age of 75 to qualify for this policy, which I regret is going to hurt somebody over 75, but it certainly takes into consideration the vast majority of folks who are still working, because the criteria for acceptance is that there is some employment income, that it's a minimum of 25 hours with one employer per week that is being garnered. And the most important thing is that the revenue, or the benefit, is based upon the tax return that's been filed with Canada Revenue Agency. This becomes somewhat contentious, and it's important to understand that if a filing has not been done with CRA, it's impossible to prove what your income is. We can't take it just on receipts. We can't take it on some hearsay that you took cash and therefore you earned a bunch of money, but you never told anybody you earned any money. Unfortunately, in our industry, in the insurance industry, proving the loss is critical, and in fact, it's a condition of the policy being paid, which means you've got to show a T4, you've got to show a financial statement, you've got to show something from last year that says, last year I earned 25,000 bucks doing stalls, so there's my T4. That's what I reported to Canada Revenue Agency. So I'm therefore entitled to a benefit under this program. In the absence of that documentation, a benefit will not be paid. Next slide, please. So I've answered some of the questions here already, but how is income determined? They're going to ask for the documentations. They're going to want to see pay stubs, receipts, file tax returns. So they're going to need something other than just your word. And this is true of all insurance. It's not limited to WAI. The burden of proof to prove the loss always falls to the insured, that's you, and not to the insuring company. The second question is one that comes up frequently. These benefits are paid and they are not taxable. Tax is really withheld because the benefit cannot exceed 75% of the income or the limit of insurance, whichever is the lesser that otherwise would be paid. So to put that in context, there's tax effectively withheld in that 25%. So the 75% that they pay is net, and so there's no tax payable on it. And there is accident insurance covered, which are provided. So I alluded to that with the 75,000 AD&D policy being a part of this when it is sold to an individual. Next slide, please. Okay, so we sort of talked about some of these other policies, and I don't want to dwell on these. So the WAI is actually fairly simple and straightforward, and I hope that it hasn't been that I haven't gone through this too quickly. I promised Stephanie I would not go on and on and on, because I do have a tendency to do that. So I've tried to focus a little bit on what that's about. There are other Q&A questions and answers that are published, frankly, that are on Horse Council's website that speak to things like, how do I prove my loss, which we've already talked about. No, you don't have to be employed in the horse industry. I'm just holding up the sheet in front of me just so I can cheat a little bit. Does the weekly accident benefit continue until I am able to return to work? And the answer is yes, but only up to a maximum of 26 weeks, or when you return to work, whichever comes first. So this is not a long-term disability. It's not permanent disability. This is 26 weeks max, so 6 months, and in a couple of weeks, half a year, basically. And it's designed to be exactly what it is. You have to be under the age of 75. You have to be a resident of Canada. So if there was a member that was an American citizen and was a member of Horse Council, they could not apply for this and receive any benefit. That just has to do with tax law, frankly. And so why don't I stop? Stephanie, maybe we'll ask a couple of questions or see if if listeners have some questions, and we can go from there.
Sounds good. Here, let me just open the chat. What about people who are self-employed AD&D?
Absolutely covered. Again, AD&D is a separate policy to the WAI. Accident, death, and dismemberment does not evaluate employment. Self-employed people, frankly, very often take advantage of this AD&D policy because it's very inexpensive, but it is related. The AD&D component is related specifically to horse-related incidents. So I should have qualified that. So it's a bit confusing. WAI, the weekly accident indemnity, will pay out regardless of whether you're employed or working in the horse industry, if it's a horse or if it's a horse-related incident. The AD&D, however, does actually have a restriction on it that it must be an equine-related accident. Keeping in mind that our client base is all effectively involved in the horse industry, so the expectation from the insurance company is that the risk factors are predominantly from the equine industry or those interactions with the horse. So AD&D, horse-related, WAI can be horse-related, but is not necessarily horse-related.
Perfect. Thank you for the clarification. And then, is it 25 hours a week or a month?
It's 25 hours a week.
Great. Okay, thank you.
So we've got lots of independent coaches, for instance, that travel from barn to barn. So we're looking for some sort of stability in the income stream to make a determination. I do know for a fact that we have paid out on claims when it's very close to 25 hours. So there is some subjectivity here, but the general rule is 25 hours from one employer. So that we're recognizing that relationship. Frankly, it's an easier sort of loss to prove. We have talked in other seminars and other webinars, certainly many other meetings and presentations I've done around this whole notion of folks who count themselves as contractor or facilities who count their coaches as contractors when in fact they're really employees. And I'm not an employment lawyer, I will say that up front. But in our experience, quite often, those folks that are in those relationships are actually employees and not contractors. And it would be in their best interest if they were protected by employment standards, which only come from those employee-employer relationships, to have tax withheld, have CPP paid, all those other things that come as a part of that employee-employer relationship. 25 hours, in my view, if it was the only employment that the person had in the industry, they should be considered an employee, even if it's part-time. And it helps, frankly, on documentation. As we've talked about here already, that T4 becomes a point of reference to say that you did in fact earn money in the horse industry, as compared to you're sending in a bill every month to the barn. Okay.
Thank you. Thank you for that clarification. With that said, I think that's all we have in the chat for now. Are we okay to continue on with the PowerPoint?
Sure.
All right, sounds good.
Okay, so let's talk about some of the other benefits, the other optional benefits. So here's a member's named perils mortality policy. This is a policy we designed about 6 or 7 years ago. I keep losing track of time because there's this COVID blank, and in my life, like everybody else's, I gotta say it was somewhere around 2016 or so when we brought this to market. This product really became a very valuable product for those that didn't necessarily want to spend a bunch of money on full mortality insurance, which we have available to us, or make available to the horse community across Canada. This policy, because it is named perils, it's effectively covering the life of the animal for death arising from some very specific causes that are external. So there's no sickness coverage here. Horse dies of colic, it's not covered by members named perils, but it does cover things like fire, lightning, collision or derailment or overturn of a trailer. We've had a couple of those, frankly, where horses have passed as a result of that. I just settled one this morning, an attack by a wild animal, where I had a wolf that decided to go after some horses in a paddock in Alberta. And that does happen regrettably all too often. Collapse of a building, collapse of a bridge. These are the sorts of common claims that we see under this policy. It's not restrictive in terms of the age of the horse or the use of the horse, or frankly, the soundness of the horse. This policy has proven to be very useful for folks that have multiple animals where again, they don't want to be any more insurance poor than they already probably are. Because we don't ask to name the horses. Again, the burden of proof falls to the individual member. If a horse is lost or they make a claim under this policy, I need to know who owns the horse. I need to know which member it is that bought the policy. And of course, I need to know how the horse died. And that means corroborating information from a veterinarian who presumably attends at scene. We won't pay out on claims that for things where the horse has been, where the carcass has been disposed of, and we can't confirm the cause of death through a veterinarian. So that's something to keep in the back of your mind. But it has proven to be a very successful sort of add-on to the member benefits. So anyway, are there any questions about members' named perils? Okay, moving on. Okay, so this is one that we added a couple of years ago. Horse Council has adopted this policy moving forward. The emergency life-saving surgery is really, again, just an adaptation of the major medical and surgical coverage that we have under our Equicare program, just as the members named perils policy is really an iteration of what we do under a full mortality policy. So absolutely a little less coverage, but certainly a little less cost as well. This policy, as you can see on the screen, provides up to a maximum of $2,500 of protection. But the critical element here is that the surgery has to be life-threatening or life-saving, excuse me, and has to be done under a general anesthetic. We cannot provide the coverage that we do provide under a major medical or surgical policy under this policy because of the limitations of cost. So it's got to be done under a general. It needs to be done in a veterinary hospital or clinic, and it needs to be life-saving. So a horse that suffers a significant cut, for instance, I had a degloving injury last week. The horse was fortunately, he survived, even though it was certainly a very serious circumstance. The bone had become septic, had a cannon bone that was exposed, but because it wasn't done under a general anesthetic, the insurance company declined coverage. So it's very specific. But it is, again, a very, very inexpensive backstop for horses, for horse owners, rather, who may find themselves faced with a very significant bill if a horse colic and had to go to a clinic for surgery or some other life-saving situation. So the ELSS, as we call it, must be, you have to have the horse insured under the member's named perils policy first, and then the ELSS is an extension to that policy. Next slide, please. And this is the other policy that's related to the horse-related cover. And this is also a new add-on for 2024 in Horse Council's sort of roster of policies. This came up as a direct result, frankly, of environmental situations that we're seeing. It's not just wildfire, but it certainly is a wildfire-related topic. It was actually developed after the Hurricane Fiona in Nova Scotia just a couple of years ago, where quite literally hundreds and hundreds and hundreds of horses were displaced as a result of the hurricane striking Nova Scotia. And a lot of folks were faced with the unfortunate circumstance of having to move their horse from their normal boarding place to a more expensive boarding place while the floods abated and while barns were rebuilt and damages were repaired to go home. And so after some consultation with the PSOs across the country, we came up with this product again as a possible way to offset some of those costs, those cost increases. But to be clear, what this is intended to do is I board my horse at Stephanie's barn, and my cost for board every month is $600 a month. And a catastrophe, a calamity occurs. There's a wildfire. Stephanie's barn is not lost, but my horse is displaced as a result of the threat of wildfire, or she suffers a partial loss because of a fire in the barn. I have to move from my barn at Stephanie's to Linda's barn, and Linda charges $750 a month. Well, this policy would pay the difference between $600 and $750 for up to 4 months, while the repairs were done at Steph's barn before I go back to Stephanie's barn and resume my relationship with her at $600 a month. So it's the cost difference in between that the policy is intended to provide cover for. There is a maximum indemnity period of 4 months. This is not a perpetual thing, But if in fact, in the example I just gave, if Stephanie's barn was lost entirely and my cost to board my horse was $750 at Linda's barn, even though I knew I wasn't going back, we would pay $150 times 4 months, knowing that that I had incurred that increased cost. Even though I was going to continue to incur that cost, I would be paid for that 4 months as a part of the claim. It doesn't provide coverage if the horse is normally kept at home. We've had a number of inquiries on that. That's been a sort of a very common question. And the reason we can't sort of compensate in that regard is that it's very difficult for us to determine exactly what the actual housing costs are if the horse is kept at home. I've had horses on my farm. I know what my labor costs are. It's just time, but I can't evaluate that. I don't charge board to others. I don't have a boarding facility. I just keep my horses at home. So even though my horses were displaced as a result of that calamity, and I incur a cost that I otherwise would not have if the horses were at home, there's no measurement that I can use as an insurer, so I can't pay into that particular circumstance. Okay, next slide. There we are. All of a sudden we're at thank you. So that was a bit choppy, guys, and for that I'm a little bit apologetic. But if there are any questions related to this or any of the other insurance products, please ask away.